Hi, this is Mike Kim, Managing Director here at Objective, where we focus on both valuation and sell-side advisory services. We work with many SaaS companies and wanted to provide a quick update in terms of what we're seeing in the market today. Financing and M&A activity in SaaS remains active and robust as contractual recurring revenue streams provide downside protection with significant upside potential as you scale. SaaS valuation multiples remain extremely robust as the amount of dry powder from investors remains high. As an owner or operator of a growing SaaS business, you are invariably being outreached to constantly by potential investors and acquirers. I wanted to spend a few minutes discussing the varying types of potential acquirers, their motivations, and their view of the world, which may help you better position your company for an eventual exit. Broadly, I'll segment the buyer universe between strategics and private equity, though there are some major differences within each category. Strategics. Strategics come in the form of both public companies, who are typically well capitalized, and private companies, which can vary greatly in terms of size and ability to pay. Public company strategics are likely considering a build versus buy scenario and typically have more of an ability to pay a strategic multiple. Private company strategics may be your direct competitor, looking to team up to drive scale, and typically look to utilize deal structure to effectuate a transaction, though some private companies may be well capitalized and be able to pay all cash. Private equity can be grouped into two groups. The first includes private equity firms that have an existing platform portfolio company or portco in the space and have a good understanding of the industry and vertical that you may be participating in. This group of buyer is ideal as they are actively looking for bolt-on or add-on acquisitions and have an ability they have a play in the space and likely looking to expand customer or geographic footprint or to acquire additional functionality. Private equity firms without a play in your space currently may have identified your specific vertical as one of interest and are looking to your company as a potential platform investment or reaching out to get a better understanding of the competitive landscape, industry dynamics, and actively looking to make an investment. Either way, as SaaS companies in general trade at premium valuations in the public markets, private equity investors have continued to pour more and more money into SaaS companies given the growth and stability that they represent as investment vehicles. One particular trend that we have seen play out is that private equity firms need to write certain check sizes, and as deals have continued to remain extremely competitive, private equity firms are paying premium multiples for companies earlier in their life cycle, which is to say that a private equity firm that previously would have only considered a SaaS company doing 10 million plus in ARR is now looking at companies who may be doing 5 million or even less in ARR and putting their dry powder to work. Specific SaaS verticals like healthcare, construction, and MarTech are seeing a tremendous amount of deal activity. As a firm active in vertical SaaS, Objective is in constant communication with major private equity firms in the lower middle market, as well as with many strategics across various industries, and have a good pulse on the market. If you would like to discuss your specific situation or learn more about how to respond to inbound interest or M&A market conditions in general, please feel free to reach out. We'd love to have a conversation with you. Thanks.